JSW Steel after its earnings came out. So let's welcome on board Seshagiri Rao to talk about how their earnings went by. Mr. Rao, as I can see on the earnings, the Q4 has been highlighted by the acute fall in production and demand as well, which plunged. But since the easing of the lockdown kicked in, at what capacity have you actually started operating versus what was the case in the months of March as well as, in April as well, post-lockdown or pre-lockdown actually?
There is a huge amount of issues which are there in the economy, both supply and demand side. But what is very interesting in those numbers was that the 69% production which has happened, majorly the 6 players contributed 94% of that production. That means the big players were able to somehow tackle the challenges which are there in the marketplace, get somehow working capital, get the labor in and start production and ramp up. That is reflected by way of the numbers which they have released. That means the entire secondary players, or small players, the MSME sector, which is there, the steel side, also constitute almost 35 to 40% of the total production. Their contribution in the month of April was only 6%. So that is what is revealing is that there is a huge amount of pain that is there in the economy, particularly in the MSME sector, where Government of India rightly addressed by way of this 3 lakh crore assistance completely guaranteed by the government, which will be lent to the MSME sector. Is there any improvement over April as regards to May, if you ask me? The 10% demand which we have seen in the month of April, I think there is an improvement definitely. All our customers, when we talk to them, they have started their operations. They are also struggling with all the 3 L's, either liquidity, labor, and logistics. These issues are common across the industry. So they're slowly, gradually ramping up. So capacity utilization is improving in the customer side. The demand side, we are seeing an improvement from 10% in April, maybe 25 to 30%. That is the kind of demand improvement which we are seeing. This demand also is majorly coming from government-induced expenditure and projects. Either you take transmission lines of Power Grid Corporation or metros, or some road, bridges, tunnels. That is the kind of pipelines. These are the kind of demand which is majorly the government expenditure which we are seeing. The customer side, I think it is other customer side, is time to recover. So we expect a very gradual recovery.
Right. Also, Mr. Rao, I wanted to understand that despite the lockdown, you've given a guidance for FY21 production and sales to be at about 16 million tons and 15 million tons respectively, which is where you roughly ended FY20 as well. What is it that you're expecting this recovery to kick in? If you could just help us understand what exactly was the rationale behind these guidance figures.
To really see any of the major big players, steel players in India, every one of them is saying they're operating at good capacity and they're ramping up capacities. If it is so, when the domestic demand is only 10% or 30% or 40%, then there will be huge accretion to the inventory. But that is not what is happening. Every company is talking about exports. So once we say it is exports, then where are you exporting? Is there any possibility of those exports getting absorbed? Are the exports remunerative? These are the questions which generally come from investors. So just to address that particular point, I would like to spend time on that. If you see, there are steel exporting countries, there are steel importing countries. The exporting countries are Japan, Korea, CIS, and China. Similarly, importing countries are there on the other side. COVID-19 impact, if you see on the exporting countries, appears to be much deeper. That's why if I see the announcements made by Japanese steel companies, Nippon Steel announced that they have shut down 6 blast furnaces out of 11 which they have. Similar stories we hear from other companies. They export almost 40 million tons every year. So those exports which are coming from Japan into the markets, they got moderated. Same story in CIS. If you look at from CIS side, particularly Russia, they impacted more, so their exports to the world is coming down.
Okay, a lot of the Dolvi and Vijaynagar facilities have been funded with foreign currency debt. Do you anticipate pressure then on this front due to also what we're seeing with regards to the rupee depreciation and pressure building up on finance cost?
No, finance cost, in fact, 7.02% as on 31st March 19, it came down to 6.24%. So there is a big reduction in the overall effective interest cost of concern. To answer your question on the foreign exchange sources, if I look at our balance sheet maybe 4-5 years back, the mix of debt between rupee and foreign currency, rupee used to be 60 and foreign currency used to be 40. But gradually over a period of time, when the Indian banks were not able to lend rupee to the extent of the growth which we are doing, so we have diversified our sources of raising money. So as on 31st of March 2020, 54% of our debt is in foreign currency and the balance 46% is in rupee loan. So when we are raising foreign currency loan, we always take into account there will be 4.5% average rupee depreciation. So if we consider 4.5% depreciation and 4% on account of raising cost of foreign currency, total together still is equal or better than the rupee loans I otherwise raise in the domestic market. Therefore, I am not that much worried about the current depreciation.
How have RM costs trended as well, Mr. Rao? As we speak, global iron ore prices have seen quite an increase thanks to China. We've been tracking that as well. But NMDC's prices are still lower. Are you expecting any increase in iron ore prices?
As far as China is concerned, if I look at the total steel production in the first 4 months of the year, when the global steel production went down by 4%, Chinese steel production went up. So that means they are demanding more and more iron ore to be consumed within China. That is one. At the same time, there are certain disruptions which we are seeing in the supply side, either from Brazil or from Australia. So these two together, the iron ore prices are going up globally, notwithstanding Japanese, Koreans, and also the Europeans are buying less iron ore. That is more than absorbed by China, and supply side disruption altogether. There is a complete dynamics as far as the iron ore pricing globally. Same thing if you apply India, what India has the iron ore. Whereas as I mentioned to you, in April, the total steel production came down to 69%. That means the consumption even within China, within India, as regards to iron ore is limited. Therefore, supply and demand side, if you look at, there is every reason iron ore prices in India to come down. In line with that, we are thankful to NMDC. They have reduced the prices by 900 rupees total. So that benefit will come to the industry to be competitive. Thereby, we will be able to export steel, which I explained earlier, in the global markets and do a lot of value addition to the iron ore of maybe $40-50 per ton to almost $500-600 value added product is getting exported from India. This is iron ore increase. Coking coal is completely a different direction. Again, it is Chinese play. Chinese 85 to 90% of their requirement is met their domestic coking coal. They import less. Therefore, Chinese are not really driving as regards to coking coal prices. And the Europeans are not buying because they cut down the production. If I see the European and also Japanese and Koreans, their production has come down drastically. Japanese total steel production in the first 4 months came down by 23%. Same story in Europe. So they are buying lesser coal. And Chinese are not importing that much of coking coal. That's why coking coal prices have crashed. It used to be $160 per ton. Today we are seeing between 115 to 120. So the benefit of lower coking coal prices also will come to India, particularly where we are dependent on coking coal. So coking coal prices being lower globally, we get the benefit. Domestic iron ore prices being reduced, so that benefit will come to the industry. So whatever fall in the domestic demand or whatever slow recovery which we are seeing in the domestic demand, then we are becoming competitive to export and compete in international markets.
All right, we leave it there. Thank you so much for joining us this morning, Mr. Rao. Always great chatting with you.